This is the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. If you're interested in the intersection of real estate, blockchain technology, AI, and more, you've come to the right place. Don't miss your opportunity to attend the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. Enjoy the show.
And hello. Welcome to another Chicago Blockchain Real Estate Collective meetup. I'm your host, Adam Carswell, joined as always by our co-host, Michael Flight, CEO of LibertyFund.io. Michael, it's good to be back here. Been a couple months. We're back on the meetup train. So any updates on your end before we get into it today?
Well, we're plugging along. It's been a long road. It's much longer than we expected, but we have most of our documentation and everything loaded up onto the securitized platform, and they are in the process of going through creating smart contracts, digitizing it, and setting it all up. So we are ready to launch, hopefully either next week or the week after. In the US, and then we will launch the non-US part of it a little bit later on because it's got some extra complexities that we're still working out. But we've had a lot of great interest in the US portion of it, and since it's limited to 2,000 people, we wanted to get that lined up and start taking orders for the fund in the United States. So we're very excited about that.
Yeah, and you know what? This just ran through my head. I completely forgot. We were supposed to do an April Fool's joke today. Happy April Fool's, everyone. So if we do anything funny here.
Yeah, well, what we're going to do is just not show up for the meeting for Richard and then just say April Fool's. But we decided not to do that. So
yeah,
because we like Richard, so we don't want to do that to him.
We do, and he's got a great presentation for us here today. So if you are with us here live, thank you for investing your most valuable resource with us here, your time. And if you're with us on the replay, be sure to subscribe and also drop a thumbs up there. Really helps with the overall visibility of the group and helps us bring on more high-profile guests, just like Richard. Huge thank you to our team over at Liberty who's helping out today. That goes from Sharav Islam, Mohamedul, Timmy Douglas, Courtney Stone, Jordan Steck, Sam Halawi, and Jason Ricks. Thank you guys for making this happen. And here we go. The title of today's meetup is Broker Dealers and Digital Assets on the Blockchain. We were talking about it a little bit before we pressed record here, Michael, but again, for the sake of for the replay and all of our listeners there, could you kind of just paint us the picture of how we came across Richard and really how we got to where we're at here today for this meetup?
Well, we've been meeting a lot of people in the security token space, and we were attending a conference probably around May of last year. And Richard and one of our partners, Jordan, had connected. And so we just kind of talked about it. And at the time, we were still learning about what the security token industry was. There's a bunch of different parts to it. It's a little bit more interconnected and moving parts than what we would normally do in one of our ordinary real estate syndications. So we've kept in touch with Richard. They've got some additional licenses. They've gone out and just done a great job, and they've also done some excellent marketing work. And then Richard has been gracious enough to introduce me to a number of people that it's just been a fantastic relationship, and hopefully we've been mutually beneficial to their business too. So with that, Richard, thank you very much.
Thanks, Michael. Thanks for having me on this show, on this meetup, and just want to give you a lot of credit. We did meet over a year ago, and you've been setting up the Liberty Fund. You're very early into this space, recognizing the value, and it's great to meet folks like you. And I think you still have a good head start on everyone, and you can kind of really, working together, I think we can help shape the whole industry for everyone and get people better access to these types of investments.
Sure. And real quick, Richard, before you dig in, I do just want to give an opportunity to give your formal bio as well as as Michael mentioned, a lot of accomplishments under this guy's belt. We'll just scratch the surface with a few here. Richard Johnson is the CEO and founder of Texture Capital Holdings. He founded Texture Capital in 2019 to take advantage of emerging opportunities in the digital security space. Today, the firm is one of the leading digital securities broker-dealers focused on leveraging blockchain technology to improve the market structure of capital markets. Richard is a seasoned entrepreneur and accomplished securities industry executive. He has held several leadership roles at the forefront of finance and technology, as well as senior positions as Associate General, Greenwich Associates, or Greenwich is probably how you say it, Associates.
How about Greenwich?
Greenwich, thank you. I know I'm saying it the uneducated North American way, I know. LiquidNet and ITG. Richard is a pioneer and thought leader in electronic trading and a former consultant to large organizations on equity market structure, blockchain, and cryptocurrency, and fintech. There we go, ladies and gentlemen. Give it up for Richard Johnson.
Thank you, Richard.
Thank you very much, Adam. Very flattering. Thank you.
Visit Greenwich one day. Thank you, Michael.
Yeah.
There's a Greenwich, Connecticut too.
That's actually where it's from. It's the company Greenwich Associates was started in Greenwich, obviously. So I have a few slides to go through. I'm going to put them up in a minute. I'm happy to take questions. I don't know, do the Facebook people ask questions? I don't know. If they do, happy to take them real time or at the end, however it works. Just want to give a bit of my background. You get a good bio there, but let me kind of add some context to that. I just spent most of my career in more traditional finance, starting in trading at a company called ITG, which is one of the pioneers in electronic trading. Depending on your age, that might not make a lot of sense to you, but when we got into the business, doing electronic trading, we were basically building computer programs that would trade automatically for you. Now that's still how like 99% of trading is done in the markets. But in 2000, when I started, it was a pretty revolutionary thing. We had a lot of fun building out new product, putting it into the markets. I went to a startup after that for a few years in the same space, which we sold to LiquidNet, which is another successful fintech company. They just got a pretty decent exit. And then I went to staying in electronic trading, went to a large French bank, which is probably the end of my career there in terms of, it really killed my enthusiasm for the space. And I was looking for something else to do. We're fast forwarding here to 2014. I was looking for, the electronic trading asset class had become matured and wasn't as interesting to me. I liked doing the new stuff, new products, new markets, things like that. And I started looking into Bitcoin at the time, became fascinated with it. Thought about different types of trading applications, obviously building algos, building smart routers, stuff like that. Then I think, as anyone who gets into space, they eventually go down that rabbit hole and realize that there's a whole lot more to the technology. So I started pivoting my career towards that in 2014, did some consulting for a few firms. Itbit, the crypto exchange, is probably the most well-known one. And then in 2016, I went to Greenwich Associates, who we've talked about a bit, as a market structure analyst. So the space was still emerging then. And I came at it with kind of the traditional finance space. And my job was to really help explain what was going on in crypto and fintech and blockchain to traditional market participants, telling them what the opportunity is, how the technology works, and so forth, and try and convey how excited I was about it. So I was there for about 4 years. I wrote several papers on Bitcoin and blockchain and so forth. But it's also while I was there that I had the light bulb moment for Texture. It was around 2018. If you've been in the space, that was when the ICOs were blowing up the first time. And Jay Clayton, who was the SEC chairman at the time, came out and said, every ICO is a security. These platforms need to be regulated. And he was right, of course. So people were raising money through what were effectively, illegal securities offerings. But at the same time, there wasn't a mechanism or a way for these companies to do it in a legitimate fashion. There weren't broker dealers like Texture then. So I really set it as my mission then to go out and start a broker dealer that could help these companies. We don't even use the word ICO anymore, but help companies issue security tokens on the blockchain and help investors trade them in an ATS. So 2019, brought in a couple of co-founders, two guys I'd worked with before at LiquidNet. Robert Young was the COO of LiquidNet, and John Halloran actually designed their ATS over there. ATS, by the way, stands for Alternative Trading System. And he is actually one of the named inventors on the patent. So we have a very good founding bench there. And we filed our paperwork in middle of 2019. It took us, well over a year, close to a year and a half, which, believe it or not, is quicker than a lot of folks. I know some folks took 2 years or more. Plenty of others gave up trying to get these licenses. It was a difficult process, and FINRA and the SEC, our regulators, they went through our business model with a fine-tooth comb. We came out
Richard,
the other side of last year.
Can I have you explain a little bit more? And I know you're going to get into it more, but what is an ATS and what does it do? So.
Yeah, maybe I'll just bring my slides up now. If I have sharing capabilities, yeah, I'll just bring my slides up and we can kind of, as we need to, pull something up.
Because I think that's something that I never understood what it was and what you did. And now I describe it somewhat crudely as a Tinder for digital assets and stocks.
Well, that's certainly pretty crudely, I guess. Yes. So, can you see this? Okay, it's coming. This is showing correctly.
You should have, Richard. You should have seen Michael's article on the difference between STOs and STDs. I guess we'll get into that one another time too.
Oh yeah, what one you want and one you don't, I think, is the answer to that one. Yeah. So an ATS stands for Alternative Trading System. Basically, it's a regulated framework that the SEC allows broker-dealers to electronically match orders, buy and sell orders from investors. So it's different from an exchange. It's actually part of the Exchange Act. So there's two types of trading platforms the SEC registers. They're exchanges or ATSs. The exchanges are obviously New York Stock Exchange, NASDAQ. They're big public marketplaces, but you can have these smaller ATSs that operate differently, and in our case we operate in private markets. So I can tell you a bit about ours. So they can come in, the New York Stock Exchange, for example, has you post bids and offers on the exchange. Crypto exchanges are like this as well. You place bids and offers, and if you're willing to buy at $10 and somebody's willing to sell at $10, then you'll do a trade and you'll execute it. Many ATSs work the same way. They often have different types of matching logic, perhaps, or they have different order types. Won't go into that too much, but I'll say that ours is actually a call auction model. So what that means is it's not a continuous market, but you can put orders in, and then periodically we'll run an auction and we'll clear the order book. This is in fact how the New York Stock Exchange and NASDAQ open the market every day. So they want to find it's a very good way to optimize and maximize liquidity at a certain point in time. And as all security tokens right now are in private markets, they're less liquid than public markets. We thought this was the best approach for us. So kind of going through this a little bit, we've covered some of this already. We want to present ourselves as the institutional marketplace for private capital. We're very focused on private markets. Private markets are massive in the US. A lot of people don't really realize this. There's some data from the SEC showing that there was in 2019 2.7 trillion of unregistered securities issuances versus 1.2 trillion of registered. So it's kind of like a 2-to-1 difference in overall size of the markets. And yet so much of the capital formation and the activity in private markets goes on without any of the technology. There is no New York Stock Exchange. There isn't things like, if you're familiar with it, routing technology or the consolidated audit trail or these types of things either. So, and that's kind of why we focused on private markets as well, because it's a huge market and there's not a lot of technology. So it was a great opportunity for us to come in, leveraging blockchain technology, the most advanced technology that there is, and it's very well suited to this type of market. And we're trying to build a new marketplace for private companies, private funds, to raise capital and for them to interact with institutional investors and high net worth individuals.
Richard, can you just explain just a little bit more about what private markets are and what type of company or assets would be in the private markets that you guys are looking to unlock?
So yeah, most companies, when you ask somebody to think of a company, they'll say Amazon or Apple or Microsoft or something. They're all public. Public means that they've done an IPO, initial public offering, and they've gone through a significant amount of regulatory scrutiny. Coinbase, in fact, just released their S1 today, which is the kind of, it's several hundred pages, I think, of disclosures and details about the business. The SEC has reviewed it, and now they can go and sell shares to the public. In private markets, there's plenty of companies that are private. The most famous one, or the largest one, the largest private company right now is SpaceX, because Airbnb and Palantir and all the others went public. But there's tons of other private companies, from your local bodega down the street, or for example, companies like mine, other fintech companies, many other startups, and so forth. And also, private markets includes other types of asset classes like real estate, which is what you're doing, Michael. So and real estate is a massive asset class, and is in fact one of the most illiquid, which is why I think there's a real benefit for security tokens in the real estate space as well.
Right, and you would also do like private equity shops and venture capital and that type of thing too. But we are most interested in real estate because that's really the only thing I know. So
yeah,
good place to be.
We're a broker dealer. So what we can do is, my next slide. Sorry, excuse me. So we are licensed to do a few different activities. When you go to the regulators and say you want to be a broker dealer, it's a very specific, they approve your business model specifically. So we're approved to do private placements, so kind of any activities in private markets, digital securities offerings, so we can help companies raise capital using blockchain technology, tokenization, so we can if somebody's already raised capital, they've done a series A and B, we can tokenize that and you can put it on the blockchain and make it available for trading. And we have, we have the ATS for trading. And that is kind of what I see as one of the main advantages of security tokens and of our model, is that we're really trying to bring liquidity to these private markets, which historically have been very illiquid. The benefits there is essentially, so, and I speak to a lot of people in real estate, a lot of fund structures are 5 years or 7 years in real estate. And somebody I spoke to recently said, well, 50% of the investors I speak to want a shorter holding period. And we can get, with tokenization and with blockchain, you can get that shorter holding period, through potential liquidity on the ATS. That makes a difference.
Richard, I'm going to interrupt you because I tell this story. My father in 1985 invested in a real estate syndication for a hotel, and he passed away in 1986, and my mother has never been able to get out of that. And it finally went into foreclosure last year, and they stuck her with all kinds of phantom income, but she couldn't get out of it for close to 40 years, 35 years. So that's just some of the things that we really like about security tokens and tokenization is you have the ability to get some liquidity.
That's exactly it. Because you think about that. If you're an investor, you have $100,000, you want to invest it. You're looking at this private market investment may seem great, and like, oh, it's they're making these fantastic widgets or whatever. But my kids are going to college in 3 years. I need the money back, or there may be a life event or a divorce or something like that. So a lot of people think, well, I'm not going to commit. I can't lock my money up. We want to change that paradigm. We want to bring more people into the market because it is more efficient, because it is more liquid. In fact, when I was at Greenwich Associates, I did a study of institutional investors here, and 60% of them said the illiquidity was a major barrier to private markets. So I think there's huge potential here, not just in providing more liquidity for the existing participants, but bringing more participants in.
And I just want to also point out that, and I thought it was a sideshow at first, but the options that you can do, so we have been, working out. We worked out a partnership with BlockFi that somebody could actually deposit their tokens with BlockFi and then borrow against them, so they wouldn't have to actually sell their tokens. If they needed the money for something else, they could still retain it. So this just opens up all kinds of incredible things. And I know people are going to say, well, you can borrow on margin and things like that, but I think you're in the right space, because it's just going to create extra options for investors, which is what everybody wants, is the extra options and the functionality for investors to do what they want with their money.
Yeah, well, you touched on something very interesting there, the DeFi space. So I moved to this slide, like I kind of talked about our mission around private markets, but our longer term, our vision is not just private markets, but reimagining market flow, capital flows throughout the economy, and leveraging a lot of the innovation in DeFi. So I think what you just talked about with the lending protocols, in fact, it is a way to get margin in private markets, because you don't really have margin in private. You have in public, you can do that. But now you'll be able to do it in private markets. There's also all sorts of other things. So let's say somebody's lent their Liberty Fund.io token to the BlockFi protocol. That can then be shorted. So somebody, maybe you don't want this, but somebody could short that, and you'd be able to track the shorting on the blockchain. So then cast your minds back to GameStop in January, where we had all those problems. Where, remember, there's 140% short interest. So more than 140% of the market cap had been shorted, and there's some quirks of market structure that explain why that happens. There's a blog on our website. We talk about that a bit. But
and can you just go just a little bit more into what happened with GameStop? Because I think people just heard GameStop and all the rest of it, but just do like a brief overview of how what 150% shorting means and why that should never happen. And why it would be impossible. And I would recommend to everybody, and if you can, we'll put a link to it in the thing. But everybody should read Richard's article that it wouldn't happen on blockchain. So I'm sorry to interrupt you.
Well, yeah, we'll get that. We'll get that in there.
Thank you. Yeah. So basically, what happens? There's a rule called Reg SHO, which says that if you want to short a stock in the market, you have to get make an affirmative determination that you can borrow the stock. Because what was happening before Reg SHO, there was a lot of what's called naked shorting going on, where people were shorting, selling stock they didn't own, and they hadn't borrowed it. So that can be a form of market manipulation. So the SEC wanted to stop that. They came out with Reg SHO, and there's a process in place. The problem is, if person A owns GameStop, they sell it in the market to person B. They lend it to person B in the market. Person B shorts it. Person C buys it, and they lend it out again to person D, who can then short it again. So that one share of stock was essentially shorted twice. So in that scenario, that was 200% open, short interest, even though everyone had followed the rules. Now, but the problem was that A, B, C, and D weren't all looking at or their brokers weren't all looking at the same ledger. Blockchain solves that problem. And the other thing about GameStop that I talk about in the blog was the other problem with GameStop was that there's a short interest part, and then there's the collateral. Because it went up so much, the DTCC, who's a clearing agency, told the Robinhood and other brokers that they had to put up much more collateral. Why did they put up collateral? Well, there's a 2-day settlement cycle, and there's a risk that some trades wouldn't settle. It might not settle, so you have to cover that position, because if one buyer doesn't deliver cash for her trade, then maybe that seller who is waiting for the cash can't deliver for the next one, and so on. So it can cause a cascading effect. So they have this thing called collateral to prevent that. Because GameStop had gone up so much, and because it was so volatile, the collateral requirement went up massively as well. And one of the other benefits of security tokens is that you can have instantaneous settlement on the blockchain. You can swap the Liberty Fund security token for a stable coin atomically. There's no 2-day settlement cycle, and you would remove all those collateral calls and so forth. Richard, so that's what I talk about in the book.
Yeah, can we just hit on that too, because that's like a really, really important thing, which is even different than traditional stock markets, that these markets don't close It's 24/7, all year long. So it's 365 days a year. There are no government holidays. There are no, non-trading on weekends and everything else. That's correct. Would you agree with that?
That is correct. I'm going to push back on that a little bit, though. I
Okay.
think this is kind of one of those things that it's possible, and crypto trades like that. So I think a lot of people are looking at the crypto markets, and they're 24/7, and things roll over from Europe to the US, and then to Asia and so forth, and around the globe like that. I don't think it's going to be the same with security tokens. I think it's possible, but security, as you were talking about the different regulations that you have to deal with, the regulations kind of keep them in one country. You're not going to have a US token trading very easily in Korea or something overnight. So I think the liquidity is still going to concentrate, in the waking hours, but it is a possibility.
Right, but if you and I decided that you had something that I wanted to buy, like you were even selling pieces of texture, and I decided I wanted to buy it, and you had, let's say, $50,000 or $100,000, and I agreed to buy it at that, the process would be you would put it up either on your ATS or on an exchange, and I could just go and buy it. And I might happen to just be, looking at, investment things, because most people are looking at things, out there at nighttime or whatever. And it's like, I want to buy this now. And, I could potentially buy it at, 11 at nighttime, Central Time in the US, or I could be on vacation someplace in Dubai and decide to buy it, in the middle of the night here in the US, and it would be, morning there.
Yep. No, it's certainly possible. Okay, and let me see what else I can get through here on this.
And whatever you can get through here, Richard. When you're ready, we can also go. We're getting ready for Q&A. I'll put it that way.
Oh, we are. I'll go.
I apologize for sidetracking you, Richard.
Not at all. Not at all. I'm going to very quickly some of the key challenges that we want to address here are liquidity, transparency, and access. I won't go through all of this, but liquidity is good for investors. They want that, like we were just talking about, but it's good for issuers as well. There's actually something called a liquidity discount, or discount for lack of marketability. And again, we have a blog on our website about that, but there's tens of billions of dollars a year that issuers are losing out on because there's no liquidity. And when there's a lack of liquidity, people, and they're concerned about the liquidity risk, they price down what they're willing to pay for it. So we're hoping to solve that problem. Transparency is a problem in private markets. The digital ledger can change that. And access is important as well. We've got so much more money coming to private markets, and BlackRock's recommending 10 to 40%. So these are some of the things we want to tackle. I'm going to skip that slide here. So talked a little bit about this. So I'm going to go here. You might be wondering, what's the tokenization process like? So really, when we're dealing with security tokens, they are, I want to be clear here, it's not crypto, it's not Bitcoin, it's not Ethereum. What we're doing here is we're taking the blockchain, and instead of having Bitcoin or Ethereum as the digital asset, we're having a security token, Liberty Fund or another one. So the asset that's digitized is, is the security, but we get all the benefits that we know from the crypto space, such as the transparency, the transfer of value, and so forth, and the confidentiality. So how do we do it? So we work, Texture will work with. We have our own capability for tokenization, but we'll also work with firms like Securitize or Vitalo or some of the others in the space as well. Our main business, we want to get the tokens on our platform to trade or raise money for them. So the way it works is essentially, we'll look at the different securities that are out there, and we'll have to analyze the characteristics of that. So, I think Michael's doing, it's a C corporation, I believe. So you have, you mentioned 2,000 shareholders. The reason you have a maximum 200,000 shareholders is because of Section 12G of the Securities Act, which says that any company with more than 2,000 shareholders has to publish all this additional information. So there's a big transparency burden. So generally people want to stay below that. So that's a number we bake into what's called the smart contract. If it's a fund structure, you're probably talking about an exemption to the 40 Act fund, and you're probably talking about a maximum of 99 shareholders. So we'll go through this process of analyzing the security, the issuance, and making sure the smart contract has got these types of rules and these controls baked in. That smart contract is then kind of issued onto the blockchain. We've got another thing called that we've built, that texture that we think issuers will want, and the next slide is going to talk about that. So as an issuer, you may in addition to those regulatory constraints on the number of owners, an issuer may say, well, I also, in addition to that, I don't want anyone to have more than 5% of my company, or I want to have a blacklist because I don't want my competitors owning the company. So we call those issuer settings, and there's a separate control panel to set that up. We work with the transfer agents. It's very important in private markets to have a transfer agent. The SEC has been quite clear about this. They want the transfer agent to be the official record of owner, maintain the official records of ownership. So we'll work with transfer agents to deploy the smart contract onto the blockchain. Then, as investors sign up and get subscribe to the offering, or if we're tokenizing an existing one, we, as texture, we need to KYC, know your customer on all the investors, make sure they're not Iranian smugglers or whatever, and we then create wallets for them. Or they can come with their own wallet in certain cases, depending on the setup. Wallets are very much the same as you get in the crypto space. And the securities issuance, when we issue the security, at the same time we issue the tokens to the wallets. So then the investors have their tokens in the wallets, and essentially the smart contract is implying so that those rules we just talked about are being enforced. When it comes to the ATS, we'll make sure that we're not going to trade anything or let anyone enter an order that would either be non-compliant with the regulations or would go against some of the preferences that the issuer had set up. I talked about this. We think this is very important, the kind of the issuer controls that we want to have. So some of the things we're building in is like blacklist and whitelist investors. So like I said, a company in the medical device space might not want to have anyone else who's affiliated with a medical device company investing in their company. Concentration restrictions, no more than 5%. Blackout periods. So this is something we found from some research we did. If a company's raising their Series B, they don't want trades going off in the secondary market, potentially at prices that they can't control. So they want to have a blackout period for 3 months while they're doing a raise. That's very reasonable. Sometimes there's a price or a floor cap. We can build that in. Buyback ability is something we support for issuers. So if an issuer wants to do a buyback, they can do it through our ATS. Also, minimum investment amount. Do you have a minimum, Michael, on your fund?
Our minimum is $50,000.
Right. So you got
limited to accredited investors.
So Michael has a minimum of 50,000, but you want to apply that also on the secondary market as well. Or you might even want to have a higher one on the secondary market. So meaning nobody can just buy, $100 worth of the Liberty Fund, for example. And then we could have other types of kind of volume restrictions and so forth that we built in. Any thoughts on that, you guys?
I think we're good on that. Yeah.
That was good. We're trying to help one of our members with some technical difficulties right now getting into the meeting. But no, Richard, man, I know we have some questions coming through here at the same time. So
I'll just finish up. This is a kind of a screenshot of our trading application.
Okay.
Hopefully going to have Liberty Fund on there fairly soon, right, Michael?
Yes.
But we can do primary offerings. This is a fake company, so investors can come in. They can look at the highlights of the company, look at the data room, and then they can make an investment straight from the application. When that round is full up, or when we've sold all the securities, that's when we'll do the token issuance that I just spoke about. And then on the secondary side, after the regulatory 12-month holding period, they'll be available for trading in the ATS. So the investor can come in, they've got their tokens, maybe they want to buy some more, maybe they want to sell some, they'll be able to enter orders into our platform. When there's a match, again, we work with the transfer agent, and when that match is confirmed, we update the blockchain to make sure that the shares are transferred from the seller to the buyer. So I'm going to pause there and see if we have some questions coming in.
There we go. Thank you, Richard. Thank you. And if you want also Well, let's just the thank you screen is beautiful. Kind of want to leave it up, huh? But always
I'll
a
kill
little
it.
bit better.
There you go.
I might have to steal that thank you screen from you. But yeah, here we go. Question time, Q&A time. And I saw some great names come through here too as you were speaking, Richard, and I believe Sam had a question. Sam, if you could actually, I'm not sure where it went. If you go ahead and just put that in the chat real quick. And hello, Mark. Good to see you. Same with Daryl. Really happy to see you guys here. There we go. So first question, Richard, how do you value, and this is from Mark Sierra, who's out of the Chicago area, I believe, Michael. I don't know if you've met him yet, but definitely you guys should connect. He's in Raise Masters. So Richard, how do you value the shares on the secondary market?
We don't. That's up to the buyer. The buyer values this and the sellers value the shares. So like any market, if you think, if you're selling, XYZ and you think it's worth $10, you put a sell order for $10 in. A buyer may come in, they think it's only worth $9, in which case, then there's no trade because there's, you're not agreeing with the buyer and the seller. If, let's say, turn it the other way around, you're buying, you want to buy at 10 and the other guy wants to sell at 9, then we do a match in our ATS, and that's a very simple example. The rules of our match would determine it goes off at 9.50.
Awesome. Sam wants to know, in your experience, where has the most demand been, Richard? Is it institutional demand or more high net worth individuals and family offices?
So that's a good question. Our mission is very much making this a more institutional space, focusing on the institutional clientele. They're not there yet now. The main participants in the space are the high net worth individuals and family offices. So that's where we're starting. 76% of family offices make direct investments in private companies, and their three top sectors are technology, real estate, and healthcare. So that's the kind of the areas that we're going to focus on. But as I was kind of alluded to earlier, we want to build this a more efficient market so we can make it easier for investors to get in. Family offices, they have generational money, they have a very long-term holding period. So right now, when they go into private markets, they can manage the liquidity. But what we're trying to do is say, don't worry about the liquidity because we're building that for you. And you can come in here if you only have a 2-year holding period or 1-year holding period. So we're very much focused on the institutions, and we've got to build it out.
Thank you. And I guess I have a question for you too, Richard. Since you're such a pioneer in the space, are you really seeing or experiencing much competition? And if so, what is that or isn't that like?
Yeah, we're very lucky. We have a very unique position. I mentioned the arduous, 15-month regulatory journey we went through. Only a few brokers have come out the other side of that because it was tough. And so we are, I think, one of five or six firms who have the same types of license as us. So we're pretty excited about that. Now that we're going to launch, we feel we have a very unique product offering and positioning. And then there was something else that came out. We're not going to have time to get into it now, but I'll just mention it. On December 23rd, there's a no action guidance coming out of the SEC, very favorable to brokers like us. They defined us as special purpose broker dealers who only do digital securities and don't do traditional securities and don't do crypto. And they're essentially giving us a pathway to become custodians of digital securities, which we will likely take. So it's not gonna happen in Q2, and it's going to be a bit of a journey. But there's a lot of really exciting stuff to come in the security token space.
And Richard, I just would like to reiterate, you've got how many different licenses? Because you had to get a separate license for the ATS. You've got a broker dealer license, correct? And you've got some other.
Yeah, it's really two, let's say, because it's the broker dealer and the ATS, but the broker dealer license is very specific to 3 or 4 different types of activities.
Okay, but it's still, people have to be licensed in those areas, and that's the arduous task that you went through to get licensed to do this. And so now you guys are ready to rock and roll, so to speak.
Yeah, and the crazy thing is that we have licenses that Goldman Sachs doesn't have. We can do stuff Goldman can't, that Morgan Stanley can't. And it sounds crazy. We're like a tiny little broker dealer. We just started because we were so focused on this space, and because we were so early. We feel have a great advantage here.
So what you're saying is you're the replacement for Goldman Sachs now, is what you just said.
I said we can do things they can't do, but yeah, no, we've got a long way to go for that. Mind
I'd be happy.
Oh, look at Coinbase. Talk about that. 90 billion IPO. I think that's almost as big as Goldman Sachs, and that's a 7-year-old company.
Right. Well,
and one more thing.
Go ahead, Richard.
Okay, I'll finish. Then you go. There's some news out yesterday or the day before that Brett Redfern, the former director of trading and markets from the SEC, has gone over to Coinbase to build out digital securities platform for them. He did,
yeah. And Coinbase is going to be bigger than a lot of banks and things too. So
I know it's kind of crazy.
Yeah, and it can't. I mean, it's like this industry didn't exist 11 or 12 years ago.
Right.
Yeah, and for the first 5 or 6 years, it was dismissed.
Right.
It was nobody wanted to. When I got into Bitcoin in 2014, it was already 4 years old. Nobody wanted to talk about it. The joke is like you couldn't sell anyone Bitcoin at $500. Now everyone wants to buy it at 50.
Yeah, and that's a lot of different technologies that followed that stay away from it trend, and the ones that didn't stay away from it are the pioneers now. And I noticed we actually have a good friend of mine, another pioneer in the space, who was able to join us. So he might have a question here. Just want to say, Adam Locke, good to see you here. And Courtney had a question for you, Richard. It's how many family offices and private investors are on the system?
So we have a network of about 600 family offices. We've not onboarded all of them. It's a fairly long process to get them all onboarded, and we need to get a bit more critical mass, I'd say. So we're live. We're actually live with our own security token offering. We're raising capital as a digital security. You can go to texture.capital/invest, and then we have our first client coming on the platform in about 2 weeks, which is actually going to be a tokenized VC fund. And then we have a pretty strong pipeline of other companies. So the more companies we add on and the more deals, the more investors we're going to bring on as well.
And real quick,
can you just repeat where they go if they're interested in? Is that for accredited investors only, or?
Yeah, it is accredited investors only. Our website is texture.capital, and then just do /invest.
Fantastic. So you can get in on the ground floor of this revolutionary technology with Richard. The guy.
Yeah, we did it this way. We want to eat our own dog food here, and we're believers in the space. This is how we're raising capital. This is how everything. So everyone should be doing it.
I'm not sure that dog food is the right way to describe it, but
It's an American expression. I'm trying to adapt. I was
gonna say it is in Greenwich, Michael. Come on.
April Fools.
I could be seeing this wrong. Did we have another question come through here, Sam? Was there? There we go.
Mark Sierra.
Mark, my boy Mark.
If there is time, mispronounced his last name.
Sierra, right, Mark? I believe that's right.
You got it. If you can hear me.
If you can unmute, Mark, you want to go ahead and ask your question, and we're gonna
unmute it or not, but
no worries. I just want to say real quick, everyone. Oh, sorry, Mark. So we're going for about 10 more minutes here, just so you know. So go ahead, Mark, take it away.
All right, cool. Yeah, typically, private real estate, you need to be able to see financials, maybe appraisals, that sort of thing to value, make a judgment on what the value of that token might be worth. Do you plan on helping create some of that transparency so people can do those valuations on their own, or how do you help bridge that gap and kind of knowledge between an operator and a potential investor?
So I think that's a question for both me and Michael. I'll go first on that. We have a requirement that every issuer who comes on our platform has to agree to provide some transparency. Now, we can do it behind a kind of a bit of a walled garden, if you will. So it's not just going to be out there on the internet. There'll be, everyone's going to be qualified investors, but there's no point having a security on our platform, if an investor looks at it and they don't know what it is, they can't see what revenue they're making, they can't see all this other kind of information about it. So that's a requirement for us. And then you Michael, maybe you talk about the kind of transparency you offer.
Well, there is appraisals. I've never really been a huge fan of appraisals. Does somebody know how they're valuing a particular asset or a group of assets, and do they have experience valuing those assets, and how are they looking at it? So it's more along the lines of, does this person have experience with this, and do you think that their theory of the value? So you're of course going to want to see all their financials. You want to see what their underwriting is and how they came about it. And then the appraisal usually comes in, and it usually just backs up what a bank or somebody else tells them that they're looking to get. And I'm not slamming any appraisers or anything, but with our fund, we're also going to have a net asset value, and I can't remember, it's either every quarter or every 6 months, there'll be a net asset value report, which is basically like an appraisal on all the assets in the fund, Mark.
Yep, that makes sense. Done by a third party, that sort of thing.
That's correct. That's correct. And so,
yeah,
but
that's what I figured. Okay.
But the best thing I just want to tell investors is that while those things are excellent and they're good clues as to what it is, you should still take a look at the underlying fundamentals of the real estate and say, does this make sense? Or Richard has a lot more experience with this. It's like, does the underlying concept of the industry and the business make economic sense? So there's all kinds of reports out there and stuff, but at the end of the day, you should kind of know a little bit about what you're investing in, or else trust that somebody knows what they're doing. So basically the valuation on Tesla is because of Elon Musk. It's not necessarily that it's anything unique.
And Mark, am I right? Are you in the Chi-Town area?
Yes. I've actually been to a meetup maybe last year before COVID.
Wow! I think I know one of them.
Actually, a couple of them. So, yeah.
Good to see you again.
I did not know that you were hosting this till today. So sorry.
happy to see you here too.
Adam's not in the Chicago area though. He's our
right.
Resident Canuck.
I know, I'm a poser right now. Real quick, speaking of the name Adam, I just want to give an opportunity for my buddy Adam Locke, who I met through Jim Morales, who's in a mastermind of mine, very good friend and connection. And Adam and I just hit it off the other day. And as I mentioned, he's in the space. So Adam, could you just share with Richard and Michael and the rest of the group a little bit about what you're working on at Cloudfire Capital?
Yeah, sure. Can you hear me?
Yes.
Okay. Yeah, we launched our fund. So Cloudfire Capital serves as GP to CFC Bitcoin Fund. So we're a crypto asset hedge fund. We're based out of PA. So we're not offshore. We're actually here in the US. So our objective with our fund was to kind of provide traditional retail investors an opportunity to invest primarily in Bitcoin, but also in other established digital assets, and allow them to kind of circumvent the need to go through Coinbase or some of these other trust vehicles that are not actively managed. So we are actively managed. We are primarily long tranche in Bitcoin, although we do allocate into other established digital assets. Like I said, depending on the project, we reserve discretion to do that. So we kind of geared it, like I said, towards traditional retail investors that don't have a lot of education or experience in the Bitcoin or digital asset space. We adjusted our structure to serve their needs. So we have a shorter lockup period, maybe a little bit of a higher minimum investment. So we accept investments 100K and above, but we're geared towards those people that, really want to kind of diversify, but aren't real sure how to do it. Additionally, we've recently started accepting trusts We have a few different IRA custodians that we work with, so we accept tax advantage plans. And then we recently started bringing in corporations and small businesses that have been thinking about and didn't have the means to add Bitcoin to their balance sheet. In addition to that, we maintain custody of all of our own capital and assets. So we have a high-level cybersecurity provider that is an actual equitable partner in our fund. They have history and experience providing engineering for and providing cybersecurity service for Fortune 500 companies and the U.S. Air Force. So we're pretty much fully integrated in our operation. And as I said, we've kind of opened the door now, not only to traditional retail investors, but tax advantage plans, businesses, corporations, trusts. We have it all at this point.
And are you going to venture into security tokens, or what do you think you're going to look at?
Yeah, so we have a team right now. We operate a full node on the Bitcoin blockchain. Obviously, our cybersecurity does, and we have a couple different projects underway. One is an institutionally geared exchange offering. We have not started doing anything with tokenization or security tokens as of yet. We're exploring the idea, but we haven't made a decision yet.
Okay, and then I've got a question for both you and Richard. Algorand, what do you think?
You know, that's not one of the ones. So that would be a good question for Jaden. Adam, you know Jaden. He's one of my partners. He does a lot of our research into some of these DeFi and alternative projects. So I'm sure Richard has more of opinion than I do. I don't want to speak out of turn on that one.
No, it's just we're looking at the cost of issuing onto Ethereum and looking at some other blockchains like Quorum and Algorand and maybe Tezos. So I'd like your information, Richard, if you've got.
You know, ironically, Adam and I just had a whole conversation with somebody the other day about issuing on Tezos blockchain, right?
It was Mohsin. Adam got to meet Mohsin, Michael, the other day, who's been a guest on here before. Yep. Go ahead, Richard.
Yeah. So the fees on Ethereum are an issue, and you know it's because it's a proof of work blockchain, and you know you're talking about $20 a transaction or more if you're doing a smart contract. It could be many times that. Whereas Algorand and some of the other newer proof of stake smart contract blockchains are a lot cheaper and faster. So Algorand and Tezos are the two that I think they've made a play for the security token space. Avalanche is another new one that came out, and even something like a Polkadot as well. Although there's no, on those last two, there's not really any security tokens right now, but there's a lot of activity on these types of chains.
Adam Carswell is a big investor in Elrond, the Romanian blockchain. So
Elrond. I thought you were going to go for Polkadot. I do like Polkadot. Fantastic. Well, we can definitely start winding it down now. We're coming up on the hour. I guess before I do so, Michael, Richard, any parting words, any closing remarks before we go this way?
Just thank you to you guys for organizing it. Really good dialogue. I'm happy to keep in touch with everyone. You can find me at richard@texture.capital, or I'm on social as well, LinkedIn and Twitter.
Yeah, let's get that again one more time. It's richard@texture.capital.
That's it, exactly.
All right, go ahead and get that in the
chat,
Michael.
What's your investment page again?
Texture.capital/invest.
Fantastic.
Thank you.
Really wanted to thank you very much, Richard, for coming on. We've been talking for a while, and what we're trying to do is expose people to the entire security token industry, and so they can go back through the Chicago blockchain meetups and see what's all involved with, and hopefully get a really good rounded picture of what it would take to, launch a fund or, a larger building or something on, as a security token. So thank you very much. We really appreciate it. You filled out a lot of stuff. You explained some pieces that we didn't. I also just released a article last week that kind of gives a rundown of the specific parts of well, not specific, but the growing parts of the security token industry. So if people are interested in that, they can reach out to me at hello@libertyfund.io. We also have a report on investing on the blockchain that they can go to our website and get. And by all means, we try to put as much educational material as possible on our website at libertyfund.io. And they're also the sponsors of the Chicago Blockchain Meetup. So I really appreciate everybody coming. And Richard, thank you very much. It's been fantastic.
Thanks, Michael. Thanks, Adam.
We'll catch up next week.
And one more thing, Michael, real quick, because I think we mentioned this at the beginning, but as far as the details of Liberty Fund launching, could we just get that in real quick?
We will be setting a date, and so we're sending out a newsletter with the exact date. We're still trying to get that determined. We are, as I said, now our securitization platform is securitized. They have everything. And once they give us the date, and like I said, the reason why I was asking about Algorand and some of the other blockchains is we're still trying to determine what blockchain we want to deploy on, because what we really want is the least amount of expense to our investors for being able to trade, and the most flexibility for our investors. So what we're trying to determine is what's the best way, and that's really the reason why we're doing a security token offering. We've gone through a lot of time and expense to do something that will give a better investor experience. And so we're hoping that, and we know that this is going to be a fantastic industry in the future, and the prices are going to come down and people are going to see the benefits. But it's just trying to explain those benefits right now.
That's right. All right. Well, thank you everyone again for joining us here today at the Chicago Blockchain Real Estate Collective. Our next meetup will be in May. Guest to be determined, but I know Michael always has plenty of aces in his pocket, just like Richard. And be sure to subscribe to the meetup page as well if you're not already plugged in there. That's meetup.com/CBREC1. That's meetup.com/CBREC1. You can get all the updates on future meetups there. And thank you again, one more time, for investing your most valuable resource with us, your time. If you enjoyed today's meetup and you're watching us on the replay, be sure to subscribe there, give us a thumbs up. It really helps with the overall SEO, visibility, and really just bringing on more high-profile guests, just like Richard. So thank you for spending your time with us. And ladies and gentlemen, we will catch you in the next meetup. Thanks.
Bye now.
Thank you for listening to the Blockchain Real Estate Podcast, hosted by the Blockchain Real Estate Summit. Don't forget to sign up for the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please make sure to follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback really helps increase the visibility of our show, allowing us to reach more listeners like you. If you have someone in mind you would like us to interview, you can go to blockchainrealestatesummit.com and leave a comment.
Hi, this is Adam Carswell, the voice of Liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.